You are watching Trading Day. I'm Amber Kanwar. We are tracking politics really all over the globe today in key focus in the UK as the British head to the polls to decide their next prime minister and their governing party. We are expecting, based on all the polls, that the Conservatives will face, the governing Tories, I should say, will face a defeat and end 14 years in power and usher in the Labour side, which is kind of equivalent to either the Liberals here or the Democrats south of the border. Let's talk about the implications. Bill Blain, CEO of Windshift Capital and author of Blain's Morning Porridge, one of my favorite reads every day. Bill, thanks so much for joining me. So, consequences of this election, how are you thinking about it?
Well, I think the actual UK election's not going to cause any real ructions at all. First of all, everyone is expecting a large Labour win, might even be a wipeout for the Conservatives after 14 years of, frankly, disaster. Started off badly with a coalition government with our Liberals, and then we had Brexit, then we had this succession of horror that was Theresa May, Boris Johnson, and then Liz Truss. A prime minister who left with a shelf life shorter than a supermarket lettuce, according to one of the things that was done at the time. She, of course, created a collapse in the gilt market. Rishi Sunak stepped in to rescue it. Now the feeling is we're finally going to get back to political stability when the new Labour government comes in. Now, people are terrified of Labour because apparently they're terribly left-wing, but if you take a look at the policies, they're exactly the same as the departing Tories, financial orthodoxy, try and balance the books, and that will be the real challenge for the UK. We'll have political stability now, but we need to repair broken infrastructure, the National Health Service, and find the money to reinvest in defence. But we're not that worried about the UK. It's elsewhere that concerns us.
Well, let's pick up on that point, because on one hand, maybe much needed fiscal stability and discipline, talking about balancing the books. And you talk about the situation in France, which is very different with the rise of the right. And you might think about that as maybe fiscal discipline, but that's not what's on the table, right? It's potentially more spending on top of what has already been a lot of spending.
Yeah, we're very concerned about European bond markets because the European sovereign bond markets are not the same as, say, Canadian sovereign debt or US treasuries or UK gilts. None of these countries own their own currency anymore. They're all dependent on the euro. And the euro is, of course, controlled not by national central banks, but by the European Central Bank. That means they have to go cap in hand to Brussels in order to borrow more once they go over certain thresholds. So the problem will be if France decides to start unilaterally spending, where are they going to get the cash from? They'll go ahead and issue OATs, their government bonds, but they can't print euros to repay them. And that's a fundamental flaw at the heart of the euro. And global investors are very aware of that. So we saw a big collapse when it became clear that the French National Rally, that's the extreme right wing, were likely to win the election. They have recovered slightly on the back of what is a typical French political fudge, which is the other parties on the extreme left and the center have decided they will get out of the way of each other, so there's only one party standing against the National Rally, Le Pen's party. And that should mean that Le Pen will not get the majority she was hoping for. But the whole thing looks a terrible mess. And already, as usual, the French are revolting. We have something like 30,000 French police on the streets ready to stop the inevitable riots that are going to follow the election on Sunday.
And a lot of key issues that seem kind of done and decided about rolling back the retirement age, maybe even lowering it down to 60, even just nudging it up caused such a political uproar. So it's a very different, I think, cultural market as well that investors need to understand. I guess the question is can 10-year yields in France blow out anymore? They've already risen so significantly so far this year. Do you expect a tantrum in the financial markets?
Yeah.
Because those bond vigilantes showed up, to your point, in the UK. Will they show up here?
Yeah, there's something very strange going on in France. In most of Europe, we've got a real shift towards the right, and that's been driven by voters being the subject of a project fear about immigration. That's what's really driven the move to the right. But in France, you also have a movement to the extreme left as well. So President Macron finds himself squeezed into a very narrow slice of the middle. And that's why they find themselves in an economy that is not doing that well, doing things like cutting the retirement age to 62. I would love that. That'd be brilliant, but it simply doesn't happen in real world economies. So there is a lot of doubt about French political competency. I know we've talked before on the show, Amber, about my virtuous sovereign trinity theory, which is that any country with a stable currency, a strong and sustainable bond market, and political competency will tend to do very well. Well, the jury on France is that they don't have their own currency, their bond market looks increasingly unstable, and you've got political instability as well. All in all, not a terribly good mix.
Well, let's bring that trinity to the U.S. and ask what could possibly be missing from that trinity component?
Okay, so the reality in the US is global markets have increasingly written off the Democrats in the November election. It's clear after last week's debate disaster that Biden is incapacitated, will not be able to stand. He's still making all the noise that he is going to continue, but everyone's aware that discussions are going on around him and with him. He's got a few days that he may be able to delay, but if he doesn't do well in the interview on Sunday with ABC, then he's going to have to go. But whoever replaces him then becomes the problem. And the first thing is, who do you choose? And then, are they going to be able to overcome the increasing charge that the Republicans are bringing up against the Democrats, which is they've been hiding the president's incapacity, hiding it from the American people. And I think that's going to become the big theme of the election. Whereas what they should really be looking at is, what do the different policies of Trump and Biden actually mean for the economy? Now, everyone is, there is a certain amount of things will be better under Trump version 2, but he is going to keep tax cuts in place. He is going to be creating subsidies for oil and gas. And he is going to declare some kind of trade war with China. All these factors are going to be inflationary, and they're going to cause an increase in borrowing, driving up that budget deficit and having the US debt clock spinning even faster. And that's going to create concerns about the US Treasury market. We're also talking, of course, about Powell being replaced with somebody more dovish at the Fed. So you've got inflation, you've got concerns about the Treasury market, and that will spin into concerns about the dollar. And, everyone says, hey, the dollar's still strong. But last week we had Saudi Arabia deciding to break its convention that it would only price its dollars and its oil in dollars. So maybe we are beginning to get to this stage where dollars becomes an issue. And the whole issue of U.S. Global hegemony based on the political competency and strength of the US could certainly come under question. And I think that's why markets are, still positive on certain aspects of the stock market. But if you look at the bond markets, in the bond market, you will always find truth. And this week, we've seen something of a sell-off.